I'm Chris Martinez, Executive Director of Hispanic Contractors of Colorado. I'd like to welcome you to our webinar today, Insurance After COVID-19. This is one of a series of webinars that Hispanic Contractors of Colorado has been doing in order to help our construction businesses deal with the COVID-19 issue. As for Hispanic Contractors of Colorado, we'd like to thank our platinum members. These are the guys who are our highest level members. They're the ones who help us keep our doors open, making sure that we can provide these types of services for our membership. We have a board of directors. This is a list of our board members. These are all volunteers, folks who volunteer their time to help HCC set the guidance of where we're going and what services and products we will be providing for our membership. As I said, they're all volunteers, so if you meet or know any of these folks, please make sure to thank them for their service to HCC. This is our mission. As you can see, we're dedicated to helping small businesses, all businesses in the construction industry, both in the public and private sector. We are truly dedicated to this, and this is one of the ways we're being able to provide that information back to our membership. We'd like to thank our sponsor for today, Martinez Associates. James Martinez, we certainly appreciate your contribution and support that you have given HCC over the years, especially for today's webinar. The series, most of these classes have been brought on, webinars have been brought on by our Small Business Council. Our Small Business Council is focused on growing small businesses into becoming more successful by creating an ecosystem that helps our members navigate through current and unforeseen issues that may arise. As well, we offer additional support through mentorship, education, and creating more opportunities for success. If you're interested in our Small Business Council, you can contact me at the office, Chris Martinez, or Victor Garcia, who is president of Flawless Steel and Welding. This council is doing an awesome job. They've been primarily the driver of our webinars. I'd like to introduce you to today's presenter. That is Alex Frazier. Alex was born in Daytona Beach, Florida. We're not going to hold that against you, but has lived in Colorado for the last 5 years. Alex sells commercial insurance for any organization that's paying north of $20,000 in annual insurance premiums. He has worked for Brown & Brown in the past 8 years in Daytona Beach, Phoenix, and now in the Denver office, which consists of 30 employees and close to $9 million office. Brown & Brown office is a full-service agency, sells commercial insurance, health insurance, and personal line insurance. Brown & Brown has over 200 retail offices nationwide, 2 in Colorado, and is the 5th largest insurance agency in the United States and 6th in the world. Brown & Brown has 4 different sectors in which consist of retail, wholesale, programs, and claims. Welcome, Alex.
Thank you. Can everyone hear me well? I will take that as a yes. But a couple shout outs before I get started. I want to thank the HCC for allowing me to present today. I also want to thank James Martinez. James and I have been doing business together now for a number of years, and I appreciate him reaching out to me and asking me to present for the HCC and for all of you today in regards to insurance-related topics and COVID-19. And most importantly, I want to appreciate everyone that's on the call today. I know that insurance is not a fun topic whatsoever to talk about, but obviously it's a need and everyone has to have it. And so I want this to be as interactive as possible. Any questions that come through, please, if you want to send them in the chat, or if you have a question and want to stop me at any time, please feel free to do so. As Chris noted early in the presentation, this isn't going to take the whole 90 minutes that we have. I don't even know if I could talk insurance for 90 minutes, but this probably will take no longer than a half hour of everyone's time today to go over these topics, and then questions and answers. And so that being said, I want to start on the slide that Chris has up here and start with these 3 topics: commercial property, general liability, and auto liability. So I'm going to start with the big elephant in the room, which is under the commercial property and business income and business interruption coverage. So I know that when the whole COVID-19 started, I want to say maybe 8 weeks to 3 months ago, a lot of owners of organizations were at least under the assumption that business interruption or business income coverage was the coronavirus would be included in that. As for the majority of people that are on this call that are construction related clients, maybe hasn't affected your organizations too much, or hopefully not, but still thought maybe any of that remaining, balance would be covered under there. Unfortunately, that is untrue, and that is not how business income or business interruption coverage works, or really in a nutshell, how commercial property works to begin with. When you think of commercial property, always uh, think of first-party claims or something that directly impacts either the place that you're leasing, or if you own your building, the building that you own. So, a fire or tornado, something that could be directly impacted, or something that could directly a physical covered cause of loss. And so that's where true business income or business interruption coverage comes into play. So if business income, or if there's a fire at your location, and you're out of business for a period of time, that's where business income or business interruption would come. Something to note on that topic that I put there that says new coverage. Everyone has their own personal opinions of what's going to happen in the future and how long maybe COVID-19 is going to be going on for. I personally think that in the future, business income coverage or business interruption coverage is going to be a mute subject. I think that it's going to be maybe the insurance form is either going to be restructured, or there's going to be a new coverage that would cover coronavirus or virus or bacterial type claims. Sort of like back in 9/11, prior to 9/11, there was no terrorism insurance. Now, maybe some of you see on your insurance policies, either workers' comp related or any other insurance policy, you see coverage for terrorism insurance, and there's typically a small premium associated to it. My personal opinion is that other insurance carriers that are out there are going to put some sort of like pandemic coverage or virus coverage that's minimal premium, but it's an optional coverage that you may elect to have on your property insurance policy. So there is no coverage under that, but something that I'm sure everyone is aware of by now. And so I just kind of wanted to reiterate there. The general liability insurance, I think, is a pretty big key, because as everyone's aware of, the general liability insurance is typically rated off of sales or payroll, and either or, there's more than likely a general liability audit at the end of each year. Now, the question has been asked, I've been asked quite a bit over the last couple of months, of how can I reduce my cost, or how can insurance carriers help me out, because insurance is a big ticket item for my business. General liability coverage would help out quite tremendously in regards to what you're projecting for your future years and what you're projecting for the current years. Meaning that if you have an insurance policy right now, and let's say that you estimated that you were going to do $500,000 in sales this year, and that's how your general liability policy is rated off of, you may want to reconsider that if COVID-19 is reflecting in those sales. So if you're truly only going to do $400,000 in sales or $450,000 in sales, you can adjust your sales and payrolls on your general liability policy at any time. It doesn't have to happen once a year. So obviously, the lower or higher that number is, the lower or higher your monthly general liability insurance costs are going to be. Something to note on top of that, insurance carriers are more lenient now than they've ever been when it comes to your monthly premiums. So if you're set up right now on monthly insurance installments or monthly insurance costs, think about calling your insurance agent or calling your insurance carrier and asking to be set up maybe on a different payment structure. And what I mean by that is I've called insurance carriers on clients' behalfs and said, hey, my restaurant client can't afford the month of April or the month of May's insurance payment. Can we push this out a month or two and reflect that on future installments? Insurance carriers have agreed and have restructured the payments, so my clients have not had to pay their month of April payment or their month of May payment. So do note that insurance carriers, for any line of insurance, not just general liability, but for any line of insurance, they're willing to negotiate, especially if you've been impacted due to COVID-19. The last one on this slide is the auto liability. Something to just consider. Evaluate your vehicle schedule. If you have a fleet of vehicles and maybe during COVID-19 you're not using as many, or you're using only certain vehicles, and there's some vehicles that are staying on your lot or staying just at your location, you're not using them as much. Let your insurance agent know. And the reason why is because you might be able, just like personal lines insurance, and if you haven't, just kind of a side note, I'm not an expert in personal lines insurance, but there's personal lines insurance carriers that for the months of March, April, and May, they're giving 15 or 20% discounts on your auto insurance for those months, because maybe if you're working from home, you're just working from home, or you're not using the vehicle as much as you normally would on a day in and day out basis. Same thing with commercial insurance. If you're not using a vehicle or certain vehicles during this COVID-19, please let your insurance carrier or let your insurance agent know, because you might be able to save some additional costs that way, depending on how you're structuring the use of the vehicles. Chris, next slide. The next 3 line items that I want to discuss is the workers' comp, and then employment practices liability, and cyber liability. So quite a few things with workers' compensation. I'm going to talk a little bit specifically when it comes to Pinnacle, because Pinnacle, I know, is a big sponsor for HCC, and they control over 60% of the marketplace out here in Colorado, as long as you're a Colorado, you only work in the state of Colorado. Something to note, just, is there coverage if one of your employees gets COVID-19? The short answer is yes, there is coverage. The long answer is it has to be traced to, was it because it was at the mark? Was it because it was in your scope, and did the employee get it when they were working? And it's hard to tell, but right now there are a few workers' compensation claims that I'm dealing with that are COVID-19 related, that Pinnacle is going down the road and paying those claims. Now, do I recommend, as business owners or your role within a company that has to do with insurance, do I recommend you going out and telling your employees that COVID-19 is covered under workers' compensation? I don't recommend it, for the simple fact of there's people out there that try to milk the workers' compensation system and really know how to do so. But the testing of workers' compensation is 100% covered. The employee getting coronavirus is a little trickier, but in my experience so far during the last 8 weeks, it has been covered. Okay. The next note here, Pinnacle credits. Some ways to save during COVID-19 is start working on the 4 savings that you can obtain with Pinnacle on your workers' compensation. And I'll go through those real briefly, but after this call, if you have any questions, I can talk into further detail on them. But the first thing is making sure you're cost contained certified. Cost contained certification, which is called the CCC, gives you a 5% credit on your workers' comp policy. It's not through Pinnacle, but it is through the state of Colorado's workers' compensation. There's a 6-step process. It's safety oriented, and if you follow the 6 steps, you apply for getting cost contained certified through the state of Colorado, it's all fairly simple. It's a little time constraint on the front end, but if you do so, you get a 5% credit on your workers' comp policy, and it's not only for your first year, but it's for every year that you're cost contained certified. So they once you apply for it, the state of Colorado reevaluates you after year 1, and then you don't have to deal with it for every 3 years. So something to note, but it's a good way to save 5% on your workers' comp costs. The second thing is what is called the safety group discount. It's a 4% credit on your workers' comp policy. There's a little asterisk next to this one though. You have to be working with an insurance agent that is part of a safety group, is step number one. Step number 2, you have to be part of a safety group yourself, either that be the BBB or the Colorado Safety Association or whatnot. There's typically an annual membership fee to be part of that safety association. So sometimes is the 4% savings on my workers' comp policy, does it even make sense to be part of the annual membership of the safety group? So something to note, but that gives you a 4% credit, and it's something to look into. The third thing is for Pinnacle is for Pinnacle policyholders specifically, and it's if your workers' comp costs are north of $30,000. So maybe applicable to people on this call, maybe not. But if your Pinnacle costs are north of $30,000, then you can apply for a dividend with Pinnacle, and you could obtain anywhere from 17 to 22% back on your workers' comp cost, depending on how you perform as an organization claim-wise throughout the policy year. So that, in a nutshell, is what it is. It obviously is a little more detailed. Like I said, after the call, if you want to talk about it more, we can. But I think that it's an addition to the general dividends that are paid out by Pinnacle each and every year. The last thing is deductible. So think about increasing or decreasing, or if you don't have a deductible, adding a deductible onto your workers' comp policy. The reason why is if you have an experience mod, most importantly, it protects your experience mod. And to give you an example, if you have 5 claims, workers' comp claims throughout the year, and they're all $100 a piece, and you have a $500 deductible, yes, you as an organization are out $500 for those 5 $100 claims. But those 5 $100 claims don't affect the experience mod or experience rating that you have on the workers' comp policy. So it helps lower your experience mod and make sure that you get as max credits on the experience mod that you possibly could be. And in addition to that, I know there's contracts out there with construction workers that's something, and especially even out at DIA, that you can't have above a 1.00 experience mod to work out there, or you have to have a really good reason why. So making sure that your experience mod stays below 1.00 is important, and one of the only ways to do so is putting a deductible in place. The next thing is assessing payrolls and monthly reporting versus monthly installments. Just like the general liability, your workers' comp is rated off of specifically payroll. You want to look at those and make sure that during COVID-19, if there's been any furloughs, or there's been any situations where maybe you've had to lay off some employees, reevaluate those payrolls and make sure that they're the most accurate, because if they need to be decreased, then obviously that's going to reduce your workers' comp costs. The next thing on the monthly reporting versus monthly installments, you can, no matter how much you pay or how little you pay in workers' comp cost, you can always be set up on what's called monthly reporting. And I always it's a little bit more work from an organization perspective, because you have to submit your actual payrolls to Pinnacle or whoever your workers' comp carrier is on a monthly basis. But what it does is it does 2 things. One, it's going to show you're going to pay true monthly costs on your workers' comp insurance, because let's say, for example, in the month of April, you were really slow, or let's say in the month of December, we had a lot of snow, and you're a construction worker, and since there's a lot of snow, you're not doing as much work. Your December bill or your April bill due to COVID-19 is going to be smaller than maybe your July bill, because you're clicking on all cylinders and it's the summer months and it's beautiful weather outside and you're out there working and going 110%. So maybe you pay more in the months that you guys are actually doing more business, but you're paying less in the months that you don't have as much business, right? And then the second thing why it's a benefit is that your workers' comp policy is audited, just like your general liability policy is audited every year. And if you're reporting your payrolls monthly to your workers' comp carrier, at the end of the year, when they do the audit, it's going to be 0. There's no additional premium you have to pay. There's no return premium or anything along those lines. It's going to be pretty darn spot on within $1 or 2. So you're not going to have to worry about any audit nightmares. Employment practices liability. The next 2 coverages, employment practices liability and cyber liability, are coverages that most policyholders don't have, but probably most policyholders should look into. They're both rated off of cyber liability is rated off of gross sales. Employment practices liability is rated off of full-time and part-time employees. They're both very inexpensive policies, and they're both extremely important. And employment practices liability, what it is in a nutshell, is it's sexual harassment, discrimination, wrongful termination. We all know that Colorado is an at-will state, and you can fire anybody for any reason. But also that employee can sue the organization for any reason whatsoever as well. And employment practices liability and cyber liability really come down to defense cost, and more importantly, in employment practices liability, it's really structured to defend the organization if there was a situation where an employee sued the organization for any of those instances that I just said, wrongful termination, harassment, discrimination, so forth. It also can include third party. So first party, meaning the employee sued the employer, but also third party, meaning that what if one of your employees said something inappropriate to maybe another subcontractor? Or what if one of your employees was out at a job site, or one of your salespeople were talking to one of your customers and said something inappropriately or discriminated against them? That could fall under employment practices liability as well. So it's something to think about, and especially during COVID-19, if you've had to do any layoffs or furloughs, it could potentially be an issue. Cyber liability, there is so much information, guys, that's going out via email and via LinkedIn or anything when it comes to COVID-19. We get tons of emails every single day of people trying to say, hey, if there's anything I can do to help with COVID-19 and whatnot. There's also a lot of fishy emails. There's also a lot of emails that you might open up that might think is good information, or you might click on an attachment or click on a link that you might think is important, or you might think that you have to open up, and it ends up being spam. That's not good. And there's no other insurance policy out there that would cover it except cyber liability. I recommend looking into cyber liability, and it's a fairly new insurance coverage over the last, I want to say, maybe 3, 4, 5 years, that is important to look at. And I would say most important to assess. And that kind of lays into my last point, which says Brown & Brown's Coalition Cyber Risk Assessment. Brown & Brown has a proprietary program that is through a carrier called Coalition, which is based out of San Diego, California. And all they need is your website and the name of your company, and they can pull what they call a cyber risk assessment and tell you how well you're doing to protect your information and how well you're not doing to protect your information. And they give you recommendations in regards to how to protect, some loss control recommendations. So I recommend that it doesn't hurt. I don't mind doing it for anybody. If you want that cyber risk assessment, there's no cost to it whatsoever. Like I said, if you want to just maybe send me an email at the end of the slides, I'll have my email address. If you want to send me an email with your name of your company and your website, please, I can run it in 2 minutes. Okay, Chris, next slide. Here's something to just, in a nutshell, to keep in mind of factors that impact your premium. All right, so I know it might seem a little small to read there, but what I put together here was on the left side are direct factors, and on the right side are outside factors. Outside factors, majority of these they're uncontrollable, right? They're things that you cannot control in-house, but direct factors are things that you potentially can control, right? Sales, payroll, number of employees, subcontracted costs, and I put in parentheses there with and without certificates of insurance. So carriers look at, do you have a great subcontractor? If you're using subs, do you have a great subcontractor agreement in place? And do those subcontractors have insurance as well, and insurance to protect in regards to a claim? Vehicle count, property values. Always review your property values, especially if you own your building or if you have a lot of content, personal property inside your building. Reevaluate those limits. Are they right? Are they overestimated? Are they underestimated? Review those. Loss ratios are very impacted on insurance premiums. And what I mean by loss ratios is a very simple equation. It's claim dollars that the insurance carrier paid divided by what your premium is. So and remember, what the insurance carrier paid. So not, subtract any deductible that you have on your policy, but what the insurance carrier paid. Okay, and they really, really drill down on that, and that's really an important key in regards to your premium. Class of business, simple example, a roofing contractor's going to pay higher rates than a CPA firm, right? And then risk controls and procedures that you have in place. Do you have safety manuals? Are you checking MBRs? Do you have a vehicle maintenance program in place? Do you have a no texting and driving policy in place? What are you doing to protect the company's assets in a result of a claim? Outside factors, you get large disasters and incidents. COVID-19 is a perfect example. National and global claim trends. If you're with a carrier that is a national insurance carrier and a hurricane goes through Florida, don't think it's not going to impact your premiums. Because if it's a national insurance carrier and that carrier, let's use Travelers, for example. Travelers is a national insurance carrier. If you're with them in Colorado, but they have a hurricane, there's a hurricane in Florida and they have to pay out claims in Florida, sure enough, it's going to be impactful and still premiums in the state of Colorado. Auto. I'm going to talk a little bit about the next slide in regards to where I'm seeing trends happen throughout Q1 of 2020, but also into the future. And auto and Colorado's population that is very impactful of that. So there are more, even though things have slowed down a little bit, there's still more people moving to the state of Colorado than there are leaving the state of Colorado. So the probability of you getting in an accident in 2020 is greater than it is in 2019. In addition to that, we have this wonderful piece of weather in the state of Colorado called hail that doesn't help out at all either. So outside factors, carrier appetite, those change from time to time, and then not at fault accidents. Sometimes it's just bad luck. Somebody might hit somebody else or hit one of your vehicles, but either they don't have insurance or don't have enough insurance to make you whole. That obviously that plays a factor. Okay, Chris, next slide. So the last thing I want to talk about today is the state of the market. A lot of people, I just got this article last Friday from an insurance article by the name of Advisen. Advisen is it writes a lot of insurance journals and insurance articles for the state of Colorado and also nationwide. This is extremely important to know. Either I'm your insurance agent or not, you need to be 100% aware of this. After Q1 of 2020, here's what the increases or decreases were per line of insurance after Q1 of 2020. Commercial auto insurance has increased anywhere from 6 to 12%. Property, 10 to 20%. General liability, 2.5 to 7.5. Employment practices liability, 5 to 20%. Cyber liability, 10 to 15%. Directors and officers insurance, if you have that coverage, up to 50%. And workers' comp insurance is flat, if not a little down from where it was last year. So the only line of insurance that's essentially flat, if not down a little bit. And what I mean by that is because your experience mod obviously is a reflection of your workers' comp premium. Workers' comp's the only line of insurance that's essentially flat. So if your insurance agent is telling you that, hey, we expect it to be flat from last year, or hey, we don't need to review your insurance, or we don't need to shop your insurance out to other insurance agents or insurance carriers, that's a complete false statement. You need to review your insurance program. At least make sure that you're getting the best rates and best coverages and best premiums for your organization, and this is. It's happening also in employee benefits, and that's been happening in employee benefits and health insurance for a while, but also personal insurance. So personal insurance is taking increases as well. So I strictly just write commercial insurance, and so this is my expertise, but I do know that in my office we have personal lines agents and health insurance agents, and they're experiencing the same thing. So something just to leave you with is expect this, put it in the budget if you haven't already. But I don't see this changing the remainder of 2020, and going into 2021, I don't expect this to be any different. So I think the last slide, Chris, I think it's just the any questions. So I thank you guys for all, like I said, being on the call. But if you have any questions, please feel free to shoot.
Great, Alex. Thank you so much for those presentations and some information. Are there any questions from anybody I have some already, a couple in the chat room, but are there any questions from the folks in attendance? Chat?
Yeah, I have two questions. First one, would you mind really quick going over that 17 to 20% dividend one more time on workers' comp? My working from home, and I got presented with a Lego project at that time, so I got tail end of it. And then I also wanted to ask, my insurance agent has recommended a few times that we look into errors and omissions insurance, which I've never done before. And we're a general contractor, so I just wanted to get your thoughts on the value of that.
Sure. Let's take the first question first. The dividend plan. So, as I noted, if you're paying north of $30,000 in workers' comp premium, you're eligible for what's called an ILCD. It's called Individual Loss Control Dividend, is what it stands for. Now, this is only through Pinnacle, so it's not through other workers' comp carriers. There is another workers' comp carrier that is trying to start this, but it has not come out yet. I expect it to come out probably by the end of 2020. So Pinnacle pays a general dividend, right? And what the general dividend is it's all based on Pinnacle in a nutshell. So Pinnacle 5 years ago, 6 years ago, 7 years ago, didn't pay out general dividends because Pinnacle wasn't performing as an insurance carrier. And what I mean by that is Pinnacle was paying $1 in claims for every 85 cents in insurance premium that was being paid to them. In any organization, that's obviously not going to work out, right? So Pinnacle did things a little bit differently and obviously turned things around. So the last 4 years now, Pinnacle has paid general dividends to their policyholders, but it's not guaranteed. The ILCD is a guaranteed dividend, and it's based off of your loss ratio. And so you sign up for the dividend through Pinnacle. It's as simple as just asking your agent to sign you up for the ILCD. And then at the end of the year, you get what's called an evaluation. And typically it's 18 months after the policy, or 18 months once you sign up for the ILCD. And you can only sign up for the ILCD when you come up for renewal. So let's use an example. It's May 1st, right? So you sign up May 1st on your workers' comp policy, and you sign up for the ILCD. The policy period expires and you renew May 1st of 2021. You'll receive your ILCD dividend check in November of 2021, which is 18 months after you initially signed up for it, which was May of 2020. And it's the reason why they do that is because if there are any open claims, they want to try to settle and close those open claims, because how Pinnacle bases your ILCD dividend is based on your loss ratio. So like I noted, that's one of the direct factors of insurance premiums. The same thing with ILCD. It's your loss ratio. So it's Pinnacle, it's whatever Pinnacle has had to pay in claims. Take your deductible out of the equation. Whatever Pinnacle has had to pay in claims divided by whatever you pay for your annual premium with Pinnacle. And that's your loss ratio. So if your loss ratio is 0, then you're going to get, it varies between class of business, but you can get anywhere from 17 to 22% back of your workers' comp premium. It's something well worth of looking into. I would say that 9 times out of 10, you take advantage of it. And here's where deductible, I think, plays key into this as well. If you're signed up for the ILCD, then take the max deductible that you possibly can take. And the reason why I say that is because it's going to protect your ILCD dividend check. And so if you can take a $5,000 deductible on the workers' comp, you're going to get a higher credit on your workers' comp premium, because the higher your deductible is, the higher your credit is on workers' comp. But it's also, as long as you have no claims greater than $5,000, your loss ratio is still 0%. Does that answer your question, Chad? At least the first one. At least the first one.
Mm-hmm. Thank you.
Yeah. The second one, errors and omissions insurance. All it is, in other words, it's called professional liability insurance. If you are doing any design build type work or acting as an architect in any such way, recommended professional liability insurance or E&O insurance. If you're offering a professional service to any organization, then you want to have professional liability or what's called E&O insurance. Give you an example. James Martinez, I think, is on this call. He tests concrete, right? Along with a number of other things, but he has professional liability insurance in place because he's offering a professional insurance coverage to his clients like you guys.
Mm-hmm. Okay, got it. Thank you.
Yeah. I think there was a question in the chat room.
There is, Chad. Can you talk about umbrella liability? We've heard that bridge work is a huge concern this year.
Sure. The umbrella liability insurance has been it's been increasing as well. So it's the state of the market, it's been increasing. And the reason why that is umbrella liability insurance extends coverage over general liability insurance, auto liability insurance, and workers' comp insurance. So typically it's when you see the premiums associated to general liability premiums, auto liability premiums, and workers' comp premiums, if you see those going up, then more than likely your umbrella liability premium is going to go up. My rule of thumb is this, is the first $1 million of umbrella liability insurance is always the most expensive. Typically after that, you're looking at $1,500 per $1 million in insurance premium. So what I mean by that, if you told me that you wanted to increase your umbrella liability policy from $1 million to $2 million, I'm saying it's probably going to cost you about $1,500 in annual insurance premium. It varies though, it could be different, and the marketplace is tightening up when it comes to auto or when it comes to umbrella liability insurance. Most insurance carriers right now are only willing to offer somewhere around $3 to $5 million maximum. So I'll give you an example. Out at DIA, they require you to have $10 million worth of umbrella liability insurance. I recommend you get a separate airport liability policy because it's going to be less expensive than trying to get a $10 million umbrella policy by itself, because you're going to have to go to multiple different insurance carriers because that's just the marketplace that we're in right now.
There's another one in the chat room. I have a follow-up question on the dividend plan. I had I have a follow-up question. Oh, the same thing. So I have a major claim in 2018. I'll be dealing with it probably until 2022. How would the ILCD impact my business?
So that claim is going to affect you for your 2018 to 2019 ILCD check, but it won't affect you for any future. It won't affect you for the 19 to 20 ILCD check, the 20 to 21 ILCD check, or the 2021 to 2022 ILCD check. That's the same thing when it comes to claims. So something to note: any line of insurance other than workers' compensation, the insurance carriers look back 5 years. So we're in 2020. Any claims that happened in 2015 to present are looking at those claims. Insurance carriers, when you take a look around the marketplace, they're looking at anything 2015 to present. For workers' comp, they look at 4 years. And what I mean by that is they really don't look at the current year that's going on, but they look at the 3 previous years to that. So when you're coming up for your 2020 insurance renewal, they're not looking at any claims that happened in 2019 to 2020, but they're looking at anything that happened from 2016 to 17, 17 to 18, and 18 to 19. Okay, so those 3 years right there are what any workers' compensation carrier is looking at, and those can affect your rates. So that 2018 claim is going to kind of be with you for the next 2 or 3 years when it comes to rates and premiums, but it's not going to affect the ILCD check for these next coming years.
There's another one. Are you automatically given an experienced MLD from Pinnacle after 24 months of being in business? Or is this something we need to reach out to them to start tracking? We are 4.5 years old.
Depends on what you pay in insurance premium. Typically 24 to 36 months after after you've been in business, you'll generate an experience mod, but your premium on your workers' comp policy has to be it has to be over a 2-year period north of $11,000 or average $5,500 in workers' comp premium a year. So if you're paying less than that in workers' comp premium, that's probably why you don't have an experience mod. So that's fine if Pinnacle if you probably don't see an experience mod. But if you're more than that, I would recommend reaching out to Pinnacle and looking at why don't you have an experience mod, because especially if you don't have any claims, your experience mod is going to be below a 1.00, which means you're going to get a discount on your workers' comp policy. Something on a side note to that, if you're ever going direct to Pinnacle for workers' comp coverage, I would recommend not doing so. And you do whatever you want to do, but there's no additional. It's not like you pay additional premium if you go through Pinnacle or if you go through an insurance agent. So if you go direct to Pinnacle or you go to an insurance agent, your workers' comp premium is still going to be your workers' comp premium. It's just a matter of how the commission structure works, and that's behind this. That's just a percentage of whatever your workers' comp premium is. So right now, if you go direct to Pinnacle, Pinnacle just gets all the commissions, right? If you go through an insurance agent, that just means Pinnacle has to pay the insurance agency a certain percentage. So why not get the advice from an insurance agent to help you out with additional savings on your workers' comp? Because Pinnacle is just a carrier, and all they're trying to do, they're just turning and burning at 1,000,000%.
Chad, another question I have, some folks asked me beforehand, is what liability does a company have if they're working on a job and there's another contractor who is not following COVID-19 safety plans and COVID breaks out?
So if I understand you correctly, you're on a job and there's another subcontractor or just another contractor in general on the job site as well, and they're not following COVID-19 guidelines for that job. Is that correct?
Correct.
Obviously there's so many precautions that you can take. I would recommend, it's your call ultimately at the end of the day if you want to keep your guys at the job site if the other contractor is not following COVID-19 guidelines. Now, if I recommend that maybe right away calling whoever the project manager is or whoever the GC is on the job and letting them know that they're not following COVID-19 guidelines. And it obviously could be impactful for your organization. I think that's just protocol, and it should be highly recommended, especially during these times now. Make sure everyone's following protocol.
Chad, I have a question for you. It's you mentioned increases on insurance, and the directors and officers insurance was seeing a high increase. I think you said 50%. Why was that? Maybe I missed when you said that.
Why is it increasing 50% for directors and officers?
Yes.
The marketplace is hardening, and the number of carriers that are providing directors and officers insurance is slimming down, and that is a direct reflection of that. It's almost directors and officers insurance in a way is almost becoming like there's only a handful of carriers that write it, so they almost are, insurance agents' hands are almost tied, and these 4 or 5 insurance carriers think that they can do whatever they want to the insurance premiums. My personal opinion. Now, obviously, there could be other reasonings behind that, but that's just my personal opinion on that.
Thank you. Yep. Are there other questions? If not, thank you, Chad. Really appreciate the enlightening discussion. It was very good. Really, really enjoyed it. Here is Alex's, I said Chad, I apologize. Here's Alex's contact information. So if you'd like to reach out to him, please feel free to do so. We appreciate your time and information you shared with us today.
Absolutely.
I'd like to invite everyone to follow HCC. We have several social media links that we'd like you to follow them and share that with your contacts. And if you're sharing, to use some of our hashtags so that we can keep track of those types of things.